a sense of capital. Aloha, ladies and gents, welcome back to a new episode of A Sense of Capital Insights time. So, your host of today, as always, is Julian. I'm very glad to have you into another episode of Live Earnings. Guys, and who's the worst stock picker? Maybe me! Because I think the results are not that overwhelming, but I just superficially screened them of SentinelOne, the cybersecurity US-based company. But we will go through the details as always together. Start in a moment. The results are already live, as I mentioned. I checked the price aftermarket after the closing bell has ringed, and it's actually down roughly 11-12%. Honestly, I don't even think it's that much if let's see on the first glance, correctly recognized the not again convincing results, but on the other hand I think they are not that bad, and the price is already comparatively low for a cybersecurity company. So if you're already scratching the floor, you really need to fail strongly to basically dig deeper and go to ground level and through it actually. However, a quick disclaimer as always before we jump into the results, that in the upcoming minutes that will not be financial advice, consultation, whatever. There's no guarantee for correctness of the provided data, so make sure you do always your own research, due diligence, and make your own investment decisions, that at the end it's your budget, your money, and your destiny, your future, and you need to live with it. So maybe you can learn from someone like me how to not invest in stocks, but who knows? Look, I'm in it to win it, of course, but as well on the mid and long term. So short results doesn't bother me, but it's not the first time. I think SentinelOne is not being that convincing. However, guys, the results are live. That as I mentioned, you can see them right here in Q1, and yes, and I opened them already. We will later on go through the presentation deck together, but the press release itself, you can screen it by yourself. I copied already the numbers, hope they are correct, but make sure you check them by yourself. And as always, I copied them into an Excel sheet separately prepared for this. We have the bottom line and top line growth, and we have additional details just based on this specific business. What is going on here? The number is not working. That's not good. Oh! Look guys, that is very unfortunate. I think it must be like this, and then okay, that looks better. And I think here is basically the same story. Okay, so now it should work. Okay, and let's start with top and bottom line growth, the most crucial numbers, at least for me. And wait, I made a note here on the top. This was what have been my expectations. So basically earnings per share expectation, revenue per share expectation, and forecast revenue expectation. We start with bottom line growth, earnings per share. You can see forecast was 2 US dollar cents, and result is 2 US dollar cents. Not a beat at all, just the coverage of it. I mean, I'm happy it was not a miss, because I think then the price would drop even further. But again, not convincing. I wanted to see at least a tiny beat, and that didn't took place. However, it's still positive on not gap base. That is at least something. Yeah, let's say good, if you want to state it like this. But however, I want to invest in winner companies, and I want to see beats, and in best case, big fat, voluminous, strong beats, and that is definitely not the case here. So for me, actually, if I don't see this small beat, and small beat would mean for me neutral rating, but this time it's for me personally a miss. Not in terms of the forecasts, but for me personally it's a miss. I want to see beats. And therefore, the earnings per share actually is already a negative rating by myself. Let's take a look on the top line growth. So revenue basically. First on the status quo, what have been the results in the first quarter 2025, and you can see that actually almost a one-to-one coverage and almost a miss, and it would be a crazy miss, because look guys, when you see and check their past, the history of revenue forecasts and the actual results, they only missed once in the last 3 years, yeah, and definitely it's not something what we like to see. So however, it was not a miss, it's still positive, but again here you can see that I want to see something more than 230 million US dollars for this for the past quarter. That was exactly the beat of the forecast of 1 year ago, considering Q1 2024 results. Yeah, so roughly a 5 million beat. Now it's only a 600,000 US dollar beat, so almost no beat. Guys, not compelling. Again, 233 million would mean that I rated neutral, not even positive. But yeah, it's they missed it. So in this regard, it's negative. And I mean, then we need to consider the forecast for the next quarter. And actually, this is not that bad, and I'm happy for this, because I love to see that at least future numbers are okay, and at least for the next quarter they are more or less okay. I mean, consider that 1 year ago, almost crying, Q1 2024, a forecast to Q2 2024 forecast, it grew by roughly 60 million US dollars, and I want to see as well this roughly 60 million US dollars positive development, which result in roughly 245 million revenue of the second quarter. And now it's 2 to 3 million US dollars lower. I don't like to see it. I want to see the accelerating, not on the relative level, but on the absolute scale. So the absolute scale means true US dollar numbers, not percentage. And it's lower. Again, they're expecting roughly 40 million more 1 year ago, roughly 60 million more in terms of the forecast. So again, a miss. I mean, for me, the actual, sorry guys, my nose is a little bit wet. It's because of the flowers and this kind of stuff outside, and allergic reaction basically. However, so really when we compare the forecast result, or the stated forecast for next quarter compared to the achieved, the revenues which have been achieved are more negative than the forecast. But to tell you the truth, both is for me negative. And so it makes it very simple for me, it's a very easy call. Yeah, so both top and bottom line results are for me negative, so the superficial numbers are negative, and that's already something. I mean, yes, we will check in a moment the details, but it is basically impossible to already change now my total verdict rating, which very likely be negative based on some details. Let's see, let's take the numbers, but I think it's very unrealistic. Guys, I think I need to very quickly, damn man. Give me just a moment, I need something to cover my nose. Okay, so back on track, back alive. Let's going back to the Excel sheet and taking a look right now into the details of these results. And we always, as you know, compare year-on-year growth, past year or one quarter, past quarter year-on-year growth to this quarter year-on-year growth. As you can see here, if it is possible, if numbers are existing. And I think we start with international growth, and I mean, just please give me just a second. I think actually they didn't stated anything in terms of international revenue share, what they did in the past, and I think they stopped it already last quarter, but I don't want to leave my hope at this point. And yes, but it seems like they didn't report it, they just mentioned it during the past earnings call. So this one we will leave out actually, guys. And customers as well was a number, I mean, they stated last quarter in the call, and I think as well in the, maybe check this one more time as well to not miss something. The total number of customers, I think it's the first time what I've seen so far. Record high per customer momentum. Okay, no, it's not that interesting. Quarterly booking growth to a record high. We can go later through those details. So I mean, they stated the last earnings release in their presentation slide deck that they somehow own 14,000 customers. Before they only stated always the $100,000 US dollar plus customers, so basically the big ones. But I think they don't state any new number, so we leave this out as well. But as I mentioned already, this both here is covered, so we take care. Annual recurring revenue basically is the core number for software subscription businesses, and it is the revenue which resulting out of the pure subscription business. So not one time occurring revenue, but annual recurring revenue. Yeah? And so a very crucial one, actually more important very likely than the total revenue. And so now they can calculate, as you can see here, with yearly sales of roughly 948 million US dollars. And let's see how this developed. And you can see past quarter year-on-year growth was 27%, now only 24.4%. It's actually not, I mean, I don't want to look, I don't want to make something look positive if it's not positive, yeah, and that's, for me, it's not positive, but we need to keep in mind that they provided a quite low guidance, revenue guidance for the full year 2025 in the last earnings results. And so we're calculating already with, I think, what was it, roughly 23% year-on-year growth. That was the status of past year. And so if ARR is above this 23% at the moment, it is at least a good sign. However, it's dropping to the past quarter year-on-year growth. 27% was comparably attractive. 24%, I mean, for a company which had this kind of hyper-growth DNA in it, again, not that compelling anymore. Yeah, and I mean, I was originally invested in SentinelOne as a hyper-growth revenue, hyper-growth company. And after past earnings results, I accepted, okay, it might be the case that the business is very sticky, that the cake is already well diversified. There are other companies like Palo Alto, Microsoft, CrowdStrike, Zscaler, Okta, Checkpoint, all of this kind of players who having good share, good positioning. And I mean, we had last year this CrowdStrike situation, this crisis, because of this basically error situation, failure situation, and that many companies, for instance, airlines have been confronted with huge challenges because of CrowdStrike. Somehow switched off the access to, I think through updates or something like this, to the Microsoft Windows account. And I mean, this kind of outage, even this didn't, I mean, investors expected, okay, now it's the time from the smaller companies, the smaller fishes like SentinelOne, and they will grab some share of, for instance, CrowdStrike. And even Tom Weingarten, the CEO of SentinelOne, mentioned, yeah, I mean, it's definitely not that sure, and it's definitely not, it will not come that quick that we participate positively out of the outage of the crisis situation of CrowdStrike and the misfunction of their solutions. But however, the market I think expected it, and you can see that their revenue is not really accelerating for SentinelOne, or not even staying stable, and it seems really like the business, I mean, it's positive and negative at the same time somehow. It seems like the business is really sticky. It is somehow really sticky in my perspective, yeah, at least for companies, for the large ones like CrowdStrike, yeah, which is good, yeah, because again, I mean, it makes sense. As soon as you've decided for cybersecurity as your partner and for their solutions and services, I assume it's not that easy to change, and you have quite solid mid to long-term contracts and all of this kind of stuff, and it's really like a long-lasting decision. Okay, however, okay, done. And yeah, so somehow this kind of expectation didn't pay it off. As you can see, again, growth is lowering and definitely not increasing, and not growing. Not nice to see. Still above full year expectations. Difficult catch from me, actually. I mean, it's all about expectation and results, and again, 1 year ago 24% would be completely unacceptable for me, but now it's just 2.5% less than past quarter, and it's still above, as I mentioned, it's still above full year revenue expectations, and that is the reason why I rated neutral. I rated neutral, even though it's actually a difficult one for me for sure. Wait, let me gray all of this here out, so it's not somehow irritating, so it will not be relevant for today. Okay, and now we have here the number of the large $100,000 plus ARR customers, because you could see here that in the past the revenue, the average revenue per customer is just $16,000 per year, per quarter. Actually, I expected more. I honestly expected more. Yeah. But okay, let's see, calculated through the year, and then it's roughly $65,000. Okay, maybe not even that worse. However, there are only, let's say, you can see it here, roughly 10%, yeah, 14,000 customers overall, and 1,400 customers are $100,000 plus customers per year. So there's definitely some room for improvement when we compare the average of, let's say, roughly $65,000 per year, and these customers. There's definitely some room for upselling, cross-selling, and basically onboard new large customers, or make existing customers spend more money on their services and solutions. Yeah, but let's take a look what is going on with these large customers. They originally didn't set a high focus on this, and then they start to set a higher focus on it. And here, guys, look, I mean, again, it's just decreasing by 2%. Yeah, last quarter year-on-year growth 24.5, now 22.3%. And actually, it's not. It's more or less a similar development when we talk on the same like ARR, but the difference here is, again, the full year guidance was, at least because we will later talk about the adjusted full year guidance in terms of revenue, but the full year guidance was roughly 23%, and this is below. And I want to see it's above it, for at least a neutral rating. So I think here I was quite kind in terms of annual recurring revenue, in terms of 100,000 plus US dollar annual customers. I am not that kind. I want to be very strict, and yeah. So actually that's as well not compelling and makes anything change in terms of the overall rating so far. Then let's take a look at the gross margin on the GAAP base, and you can see, I mean, it's basically on a great high scale, working 75%. I mean, it was lower in the past, it increased in the past. You can see here from Q2 2023 70% to now 75%. But in the past, you can see it 4 quarters, it seems to be very stable, and yeah, seems like reached kind of a ceiling, and that is okay. I don't want to rate it negative because it is already a quite high number. What I don't want to see is that it's getting lower, and that's not the case. So for me, it's a neutral rating. That's okay. And now we're checking out what is going on with operating margin, or let's say with the operating expenses on the GAAP base. For me, it's interesting. I always put it in ratio to the revenue, the achieved revenue. We start with general administrative costs. Definitely something where a lot of room for improvement is when you compare it to competitors. You can see it past quarter, year on year, they decreased it by 7%, now only by 2%. So it's getting a bit lower, not that nice. It's almost no development. Again, yeah, here you will touch kind of a floor in terms of costs and expenses, even though there might be some synergies. However, the lowering will get slower and slower, but that is actually too slow for me. Really, if you compare it to other cybersecurity companies and their G&A expenses, there's definitely some room for improvement, and going actually up from last quarter to this quarter by 1% is not acceptable for me. Yeah, so I rate it negative. We have here the expense in terms of sales and marketing, and on the first glance it seems to be the same story, but the good thing is, I mean, last quarter year on year it was decreasing by a negative 1%, which is great, and now it decreased by roughly 4%. So it's accelerating in the right direction, and that is actually something positive. Even though I mean, maybe there's kind of seasonality existing. Even though last quarter it was 57% of revenue, now it's 58%, so a bit higher. Don't like to see it, but it is somehow decreasing. Yeah, it is somehow decreasing, and again, there might be some kind of seasonality existing. This is Q4 2023, this is Q1 2024. You can see it went up by 4%, and now it went up only by 1%. And I think that is already something kind of positive. I mean, kind of positive. Yeah, I rate it neutral, and it's not really a positive neutral. Don't worry, guys. I am not drunk or something like this, but again, yeah, it is okay. I mean, I'm a little bit shaking between negative and neutral rating, but for me, neutral is okay. And now let's check out what is going on with research and development expenses. For me, it's actually not the worst costs which exist. It's same a bit like sales and marketing, because they need to be aggressive. I mean, you can see the revenue slows down, the revenue growth, and you can't, from my perspective at least, but I don't have this kind of insights of this business, but from my perspective, you can't expect that you accelerate revenue growth or re-accelerate it. And on the other hand, lowering very aggressively the spend for sales, marketing, and even maybe research and development, because you need to stay competitive in this regard. And at least it was lowered a bit, and I see it as an investment in the future. However, you can see past quarter it went up by 1.1%. Now it went up by roughly, let's say it's well 1%. Make it simple. It's not a big difference. Let's say it like this. So it is actually one of the lowest in the past quarters. Lowest was 31%. It's the second lowest in the past quarters. But again, it's year on year. It is up. It is higher than 1 year ago. And that, even though it's lower than the past quarter, that is neutral. And again, this is something almost actually more negative. Actually, almost more negative. Yeah. So difficult decision. For sure, all three expense levels are not convincing. That is my opinion about it. And yes, again, it's cheaper. I mean, here we have the total operating expenses, and you can see past quarter -7%, this quarter -5%. Yeah, and I mean that is what count most. And I mean, bottom line here, I rate it negative because again, it's 1% up to past quarter. The decreasing it's decreasing, but it's slowing down. Yes, again, I assume competition is very strong, and they must do this. It's investment to the future. But guys, again, nothing compelling at all. Yeah, that's not how the earnings season should get finished, but it is sometimes how it is. That's part of the life as an investor. Sometimes joy, sometimes a little bit more pain. And now I have some own created KPIs, and what you see here is the retaining expenses per existing $100,000 plus annual recurring revenue customer. So very simple. I mean, I wanted to create some kind of a KPI, even if it's very fetched from far away. You know, you really need to take a look on this with distance. But this gives me a at least. Oh no, they all. One moment. That's not good. Make it like this. Quickly need to adjust them, because otherwise we can't compare it to the past quarters. So, and now this one as well. So okay, I think that looks better. Just give me a moment where this number is so high. Sure, I don't want to communicate wrong information. That is not my target, but it seems to be right. Yeah, okay, makes sense, because so what I've tried to create is two KPIs basically. I want to see what are the costs for the large customers they have, this $100,000 plus customers, to basically keep them. Yeah, and I took 100% general administrative costs and 50% of research and development costs. Very simple calculation. And then we have the other perspective, what are the expenses to recruit and acquire new big customers. And here I 100% use sales and marketing, and I used 50% research and development. Obviously it's not that clear, you can't separate them and categorize them that strictly and put it in this bucket and that bucket and all is clear, yeah. However, let's check out what is going on with the expenses for the existing ones, yeah. And you can see past quarter it went down by 10%, which is actually quite attractive. Still now by 5%, but the decreasing is stopping a bit. However, it's still the lowest number. Yeah, and that is nice to see. I mean, it's obvious. General and administrative didn't raise that much, but of course, the existing customer number with more than 1,400 grow very strongly last quarter compared to the quarter ago. So, however, it is for me as well a neutral rating, because it is the lowest, it is getting lower, but it's deaccelerating a bit, but it's okay for me, it's okay. And now we check out what is going on with the acquisition of new customers, and that is of course a crazy number. And you can see a -7% past quarter year on year decreasement. That's okay, decrease. And now it's actually up by 47%. And I mean, what is the reason for it? Again, when you take a look at this calculation, we don't need to dig too much into the details, but as you know, 100% sales and marketing, 50% research and development. But the problem is we only take a look here on the new ones, the new big ones. And in this case, we're talking about only new ones, which are 48 new big customers. Let's say 50, yeah? Last quarter, we had the growth of roughly 100. Let's check out what was going on 1 year ago. Yeah, it grew by at least 60. Yeah, I mean, if you check this out here, it always, each quarter, only this one, which is it, Q1 to Q2. Here it grew by a little bit less, only 40. But everyone else, it experienced a way stronger growth, and that's the reason why now this acquisition cost, let's say it like this, again it's a quite fictive number, it's definitely difficult to catch, but I try to at least create something to give a better idea for myself, and again compare it to the other numbers, and then to the earlier quarters, and then it makes at least sense for me when you put it in relation. However, you can see how it grew, and that is massive negatively. And here again, you want to see that the absolute number is growing way stronger. Oh, that's not good, man. And now we have net income margin on a GAAP base, and crazy. I needed to check it twice, but it is actually the case. We can check it one time together. You can see it here, was 91% on the GAAP base compared to already 38% a year ago. Yeah, so crazy. I'm not sure what happened. Earnings call will bring light into darkness in this regard, but you can see, I mean, it went up past quarter year on year by 10%. Now it went down by obviously 53%. Yeah. Wait, not sure if you've seen it, but these are the numbers. And yes, crazy. That's, can't get more red. I mean, for sure there's something behind, yeah, which is now difficult to evaluate and think about, but yeah, just the numbers. I mean, numbers speak truth at the end, and that's not the good truth. On the other hand, we have free cash flow. Yeah, and here past quarter it was 2% up. Again, it's 2% up, but you need to see that it was already. You can see a big jump from Q4 2023 to Q1 2024, -6% to 18%, and now we have -4 to +20%. So, and that's the highest by far ever. That is great to see. And I mean, if I have the chance to do it one time today, it's not unlikely it will be and remain as the only time I can do this. However, free cash flow margin, I need to be fair here, and that is actually, from my perspective, positive. But maybe I was a bit too early, because we have here the shareholder orientation in terms of how much value do they want to grant their shareholders, and if there's a certain level of dilution is going on of the shares because they're granting a lot of stock-based compensation to their employees. That's obviously not that beneficial. So we're checking out now what is going on with the stock-based compensation based on the revenue, and this actually doesn't look that bad. I mean, past quarter it went up by 2%, but now it's down by 7%. 7%, and the lowest in the past 2 years. Yeah, by far actually. Nah, not by far, but it is for sure the lowest there. Yeah, and it is still high with 30%. I don't want to lie, but it's heading into the right direction, and that is what I rate here. And actually here we have another positive result. I can't believe it. But now I think the time is almost over in terms of positive energy, and because then now we check out what is going on with the Hi Gakpo, thank you very much for joining the stream and using the chat function. You're asking why they spend so much expense this time. I can strongly recommend you to reach out to the live earnings, or tomorrow I will do it as well. Read the transcript and ask what was going on. I have really no clue. Especially, I mean, again, this net income margin looks really like absolute BS, absolute shitty. I can't tell different. Yeah, but I mean, again, if you look really on the general expenses, on the operating expenses, it's not like something went completely out of control. Again, I mean, G&A is more or less in line. Sales and marketing and research development, all of this is more or less in line. Can you email the sheet? Yeah, of course. Yeah, I can actually. I mean, you're the first one, you're asking for it, but the reason why I'm doing this is because you are the first one, so you deserve it. Someone who asks good questions, get good answers. Yeah, share me you can DM me, I think, your email address, and I will share it with you, don't worry. Okay guys, but let's go on, and now we take a look on the full year guidance, and I mean, and again, Gakpo, let's see what, I mean, I need to sleep as well a night over it, and I already sold at the beginning of this earnings season Alphen, a Dutch vendor of substations, EV chargers and battery systems, and I sold this company as well. And I only owned 6 shares, stocks, 6 different stocks. Then afterwards 5. Now I'm only again invested in 5 companies. I don't want to sell any other company anymore. But I mean, if the results are really that bad and I need to sleep over it, and it is sometimes how it is. Maybe I will even sell SentinelOne. I will definitely share this information on the YouTube channel, on Instagram. I try to stick as long as I can to the cybersecurity space because I like it. I still see potential in terms of SentinelOne based on their solutions. I mean, when I read different articles, posts on Reddit, on tests like the Mitro test, or how's the other one called? I always forget it. The 4 corners of Gartner. Look guys, we have it here. I hope they share it. Maybe they share it not anymore. Oh yeah, we have it here. Is this Gartner actually? Yeah, it's Gartner. So they have been rated quite positively, and there are different, let's say, sources which state that the solutions are good. And I mean, if the solutions are good and they have a certain base of customers, I think for me it's just a matter of time they will be successful and they will stay successful, but somehow in terms of sales it doesn't seem they're executing that well. And that is what we can see actually as well on the revenue guidance. Here on the left side we have the old revenue guidance. Yeah, the revenue guidance which was communicated past quarter for full year this year, obviously. And you can see, I mean, it was more than a billion, 10 million more than a billion. Yeah, so they really want to cross this line, and was a target. And now they lowered it by roughly, let's say roughly 10 million, 1%. And in general, if it would be only 1 million, yeah, or even 500,000 lower, I don't like to see this at all. It is for me always okay if the current results are not that great, but I want to see that the future is bright, that the management is confident, the market is confident, all looks great and in shape. And that's, I mean, just 1% lower, yes, okay. And maybe I should be thankful, maybe tomorrow, and I thought about this today already, should I purchase further shares of this company before earnings? And I thought, no, that's not my style of investing. I don't want to trade actively earnings results. It's way too much black box, type of black box for me. So actually, I've decided to not do anything as well, because I had some other stuff to do. And maybe if I sleep one night on it and I wake up tomorrow and I spend a bit of time and calculating even a bit further, and most important, read the transcript of the earnings of the live call, of the earnings call, maybe it's not actually that bad, and maybe I can be thankful that it was only lowered by 1% or 10 million US dollars for the full year, but the stock dropped by, let's see what is currently the situation, by 12% after hours. Yeah, so pause this. Yeah, maybe it's even a good entry. Let's see. I need to. And Gappo, what you're writing, this is my 4th earnings call, still the same. I feel so frustrated. Yeah, man. At least we can share this experience and those emotions. Yeah, I mean, you need to know that I was invested into this company. I need to check it, but I was already invested in this company 2 years ago or something like this, for half a year, something like this. And then I wanted to be invested into winners, and I thought they are really the aggressive small player who's taking shares from companies like CrowdStrike, and then CrowdStrike was even stronger than them and this kind of stuff, and I really thought, what is going on? So I sold my position. Afterwards it grew. I mean, it was really, the time was really not good. Then the stock price raised, and then it dropped, and I bought it back when it dropped. It was a bit higher, then I sold it, but it was okay. Then I was up 30, 40, 50%, and now I think now I'm negative. I was today 5% up or something like this, and I think now after the drop I will be 5% or something like this down. And yeah, it is kind of a mess. I mean, I always mention this, for me being invested into the cybersecurity space and having not that much clue about it, because it is, for me, so difficult to catch. A lot of times I love the business, the services, the products. I'm very interested in figuring out what they are about. And no matter how much I read about cybersecurity, I mean, I'm not reading all day about cybersecurity. That's not the case, honestly. But other products, you really quickly understand the case and the differences between different products and services. And cybersecurity is, for me, definitely challenging. And yeah, however, so it's, for me, luxurious that I can be invested in something like this, even though I don't understand it to the 100%. I need to rely on what I read in articles and on from rating agencies and this kind of stuff. That is so far quite positive. So I do it. I'm invested, but yeah, experiencing this kind of results is of course not that compelling. However, back to the full year guidance adjustment, and again you can see it. It's lower by 1%. I don't want to see it's lower. It's a very simple call for me. Very, very simple actually. It's a negative rating. Yeah. This one. Okay. And then, which means now it's 21.5% year-on-year growth. Before it was 22.9% year-on-year growth. I told myself, because of this, after the past earnings, I already talked about selling my position, yeah, and I told myself, look guys, okay, it is already comparatively cheap. It's when you take a look on, for instance, here we have different kind of cybersecurity companies. And the price to sales ratio, and you can't see it, it's a bit too much on the right, but what I can tell you is that the orange bar, so basically SentinelOne, is really on the low. I mean, I just quickly stated the price sales ratio. CrowdStrike 29, Zscaler 16, CyberArk 16, Palo Alto Networks 14, Checkpoint 10, Okta 8, and SentinelOne as well, roughly 8. But you need to keep in mind, Okta is primarily identification cybersecurity, and SentinelOne is AI, is KNAP, is endpoint security, XDR, DIFR, SIEM, MDR, EDR, all of this kind of crazy words. You see it, I've heard it, but I still, again, as I mentioned, I have struggled to understand it. However, yeah, it's quite cheap price to the others. All the others are expensive, depends on your perspective on it. And I thought, okay, but if they can keep at least this 20% growth level, above 20%, this is really what I want to see. It's okay for me, and they should keep it long, but I'm not sure how long they can keep it. If they last year achieved a growth rating of roughly 32%, then for this year they guided 23%, roughly 10% down, and now they lowered it by another 1.5%. So it's getting very close to this 20% bar. What I don't want to see that it became crossed. Gakpo. You asking what do you think about next Q2? Yeah, not sure. I mean, let me finalize this, and then let's go through the sheet, and then I will maybe give a final verdict. Yeah, but let's see. So far, I am not that amused. Okay. Let's talk about gross margin. At least here, some room for breathing fresh air, because it is stable. Yeah, it remained stable, was not negatively touched, so neutral. And then we have the operating margin, and here again, actually, this is the right one. Or let me see this again. Financial outlook. Wait, 3 point. Is it? Okay, wait. Maybe it is improved. I thought they lowered it. Let me check this one more time, not that I'm doing a huge mistake. Okay. Okay, it was already 3.5%. 3.5%, okay. Good. But now it's a bit lower. So let's go back. So 3%. No, it's 3%. Here it was 3.5%, right? Yes. Okay. That. Okay, it stayed stable. it stayed stable. Okay, sorry guys, but I really need to make sure that I'm not doing a wrong move here. So it was before 3 till 5%, 3 till 4%, and it is now after 3 till 4%. So that actually remained untouched, and therefore that is as well a neutral rating. So it doesn't seem like the profitability is, at least so far, unsecured. Now somehow confronted with kind of a risk. I mean, it's always risky, this kind of company, which might again faces strong competition, and therefore need to step up their investments and expenses. But this at least looks okay, yeah. But again, revenue, man, guys, and revenue, it is for me a way more revenue growth story than a profit growth story, no doubt about it for me, and therefore really again negative rating. And now we have something positive. I am not even sure how positive this is, and that is actually they mentioned, let's check this out again as well together, and here we have it. They mentioned directly under the top KPIs, in addition, the board of directors has authorized a 200 million share repurchase program. The authorization reflects the company's confidence in its long-term growth and commitment to enhancing shareholder value. Repurchases may be made from time to time in the open market or through other methods, subject to market conditions and regulatory requirements. I mean, you can see here they have cash equivalents and investments of roughly 1.2 billion. I think past quarter it was 1.1 billion, so 100 million more. And I think they now have a good feeling for when they will basically land the eagle, yeah, and on a neutral loss profit level, yeah. And so I think they know, okay, we don't need this kind of bankroll, and on the other hand, we think that really our company, at least this is what they want to communicate somehow passively, we think that our shares are too cheap. It's a good idea to purchase back shares. But guys, keep in mind, if companies like this company, they do it, likely not that late after, they spend it again and push it forward to their employees, as you can see here, because again, stock-based compensation is still high, and you can see, I mean, in just past 3 quarters, they basically spent 212 million in terms of stock-based compensation. Yeah? And so if they purchase now 200 million shares back, very likely to give them back to the employees, and again, investors getting diluted. Yeah. However, okay, no, I will rate it neutral. It's actually not that complicated for me. Again, if it would be just buying back shares, I would see it a bit more positive, but because it's a strong stock-based compensation, I assume they purchase it and push it forward as well to the employees, and so it's not really adding that much value. I keep it neutral. However, I mean, so far, and I can give already my verdict right now based on what is stated here. Maybe we see some other interesting facts in the presentation slide deck. I'm not that confident about it, but let's check this out in a moment. However, for me, I think it's the most simple. Almost, maybe Alpha was more easier to give, but that's crazy simple verdict and final rating of negative, straight red. I mean, already here it was somehow decision was made for me. The details are not changing anything that strongly, especially, I mean, yes, free cash flow margin nice, stock-based compensation nice, but free cash flow margin again will very likely be next quarter way lower, and stock-based compensation is just more the cherry on the cake or the icing on the cake, not the most essential number for me, at least. I would way more love to see that ARR or 100,000 customers going way more up, or at least the expenses developing better, and or I mean the full year guidance should be stable, guys. Yeah, and in terms of revenue, that's not the case. Man, that's really not a joy. That's not a joy. SentinelOne, what you're doing. I mean, I was invested in the past in CrowdStrike. Why I didn't kept it? I was invested in Palo Alto. Lord, why I didn't kept it? And I talked about as well to when I wanted to invest in SentinelOne, to talked about being invested in Zscaler, especially in the times when CrowdStrike had the outage situation last year. SentinelOne price was raising. I talked about maybe it's good time to sell the shares and purchase even CrowdStrike maybe. I'm not that negative for me that I didn't buy CrowdStrike shares, but maybe Zscaler would be a nice option, yeah. But as well, they're not too deep into it actually. So maybe I'm not made for the cybersecurity space. However, guys, let's go through it and the slide deck, and after this we will not spend that much time into the slide deck, but after this I will cover it again, check out what is going on with the current price, after our price, and as well if there are first reactions existing and seeking out for by the users there. Highlights we already covered, guys. Net income margin, yeah, well, it's non-GAAP, likely it's non-GAAP. Okay. So innovation leadership, can you read it? Maybe I increase a bit the size, it's a little bit more easy for you to read. Launch Purple AI Athena, the industry's first true end-to-end agentic AI platform for cybersecurity. And again, it could read now what it is exactly, and I would really like to do it, but I will forget it a moment after, and I have maybe even don't understand it what it is. Bring together CVP, CSPM, CDR, CDS, Cloud Identity. Okay, that makes sense. And AI SPM as fully integrated solution powered by AI. Okay, sounds for me compelling. Again, I like companies which provide great services, good solutions, which are reliable, stand behind their strategy. I like this very much. That's the reason. I mean, it sounds for me all compelling, but again, cybersecurity companies I think are very strong in marketing, very strong in sales. Definitely something what you should not underestimate if you are invested in them or think about being invested in them, and all of them represent themselves very positively, even though it's just the case on a limited base, but really seems to have good solutions. Purple Eye, triple digit quarterly booking growth, record high attach rate among new and existing customers. That is nice to see. Purple AI again is it's basically the generative AI which supports the cybersecurity experts, or even using the solutions of SentinelOne, or even substitutes those basically. Yeah, was launched roughly a year ago, so it's comparably new, and I mean therefore it's not that surprising that the growth is still very high, but nice to see it's triple digit, I need to say. Even though I think the base, who knows how strong the base is, they're not giving any information about it, but again that's typical for the industry. At SentinelOne, it's CrowdStrike for instance, you don't get this strong details as well most of the time. Data solutions suppressed 100 million ROI in Q1. That is nice to see. So I mean, when you check out their website, you have here the platform, and you have data processing, data and AI, and you have this endpoint, cloud security, identity security. But however, this data and AI, so data processing services, and it seems like this is getting more and more stable. And I mean, 100 million of ARR sounds like something solid, not that bad. At least it's 10%, so it is something. They are getting more and more diversified. That's nice to see. Customer momentum growth 22%. Multiple Fortune 500 wins. Okay. yeah, per customer just by yeah, okay, yeah, that is, okay, yeah, they, honestly, because in terms of profitability, it, I mean, yes, net income margin doesn't look that great, but it really seems for me they getting more and more profitable, at least on the bottom line. Yeah, here they differentiate their business to the legacy ones, the OGs basically, and the newer ones like Microsoft, Carbon Black, and CrowdStrike, and then they're SentinelOne. And what I've remembered by myself is SentinelOne is a little bit more AI driven. Obviously, Microsoft, CrowdStrike, they will provide as well AI solutions in terms of cybersecurity. But it is more a bit like this, and what this means is that I think at SentinelOne you don't, especially as a smaller company, you don't need a huge cybersecurity department with many staff members. It is working quite autonomously, but on the downside, when you use SentinelOne, you need processing power. So hardware power, machinery power, computer power for making sure this kind of stuff was working. I think at solution it's from CrowdStrike, it's a bit lower, the power you need, the technical setup, but on the other hand you need stuff. So for larger companies, very likely it's a little bit more attractive to go for CrowdStrike because you can, it's not an issue to have a cybersecurity department, but as a smaller one with, let's say, 500 staff members, 1,000, 5,000, not sure how many cybersecurity employees full-time you can engage. Yeah, and then SentinelOne might be more attractive. Yeah, we have here this autonomous security. Yeah, Singularity platform. Basically, that is the platform as a customer you can access the package of SentinelOne solutions and services. We have here again Purple AI, so the AI solutions again, which is supporting the users and making sure you don't need that much users for from the customer side. You have here different services, and you can see here as well who is competitor a bit of it, and they can actually integrate it. I mean, that is what they want to show here. So even though these are competitors, it seems like they can integrate them, and that is nice to see that it's somehow working. Yeah? And with different other parties here. Okay, Singularity platform solutions. We have this data lake. Yeah, I don't want to go too much about this. Actually, yeah, here cloud worker protection for cloud security. Crazy. Knapp cloud. I mean, Knapp is a very strong business. I think Knapp, check. I think growth estimation is 22% the CAGR, so annual growth basically. Identity management only 13%, EDR 15%, so endpoint detection and response, the legacy business of CrowdStrike and of SentinelOne. But again, Knapp it's growing very strongly, and it's nice that they are or seem to be well prepared in this space and then other spaces as well. Here we have the numbers of the total addressable market, but a lot of companies are stating them really strongly or pushing them, really blowing them up a bit. And you can see here the addressable market. Endpoint security is only limited. Data analytics, where they have their 100 million revenue, much potential left. That is Knapp basically, and this is all this other stuff. Yeah, here even further. That's other stuff. Purple AI is this, for instance, and here we have further services. So yeah, there's definitely some time left, but again, should not forget other players are as well very strong. We have here some kind of a flywheel effect of the ecosystem. We have some statements by different, hopefully neutral parties who stating that the solution is really working well. Mitre or Mitre, M-I-T-R-E, not sure how to pronounce it, but it seems like you can see here the level of noise of alerts is very low. SentinelOne can detect, it seems very accurately, way lower than competitors. Not sure where CrowdStrike is listed and why they are not listed here. But yeah, and here again Gartner, big one, big company in terms of rating those solutions. And SentinelOne is good positioned, and I think most of the time when I have seen this Gartner quadrants of endpoint protection, Microsoft and CrowdStrike have been always a bit more developed and better shape basically, but right after behind was SentinelOne, and then there was a gap to the others. Frost Radar, yeah, here as well it seems like they are very innovative. Not sure what the Frost Radar is, actually never have seen it. Yes, there are a lot of awards, so that is not that, you can see it here. That is not that convincing for me. So let's check out a bit about the numbers, maybe we get some better insights about it. Annual recurring revenue we covered. Okay, that is actually quite interesting, because I checked as well after this. They released this past quarter, I've checked this in terms of CrowdStrike, because now the presentation slide deck, there is a presentation slide deck and not a shareholder letter anymore, and it looks way more similar to CrowdStrike than before the shareholder letter of SentinelOne. And when they always told SentinelOne, we're not selling modules of different softwares and solutions, we're selling good solutions and want to offer it as one package. And they have been very aggressive in this regard in the direction of CrowdStrike, for instance, who's selling the different solutions in modules and packages. And now they adapted to it, SentinelOne, so I assume they figured out might make sense to sell it in modules as well. That's just the status quo. Yeah? That's the benchmark in the sector, in the industry of cybersecurity. And when you compare it, I mean, here you can see 40% are customers of 3+ solution categories, and 20% are 4+ solution categories. And I checked this out, I think, at CrowdStrike. I made a note. And yes, and at CrowdStrike, I think they're stating that, again, here we have 20% and 4+ solutions, and at CrowdStrike they have 70% of the customers have 5+ solutions. I mean, it depends as well, of course, how you define a solution, but again, 20% of SentinelOne's customer have 4 solutions up, and CrowdStrike 70% have 5 solutions and up. So you can see there's a lot of room for cross-selling, for providing, for selling more solutions, more services to the existing customers and new ones. And so I'm quite confident and that they will improve their sales per customers. Yeah, I'm quite confident about this, and that customers will adapt to this AI stuff and this kind of things. I'm positive about it for sure. So here we have for sure some upside, and again as well, the international income, for instance, it seems for me like SentinelOne is way more diversified. Yeah, I can't show something here because it was stated in the call and stated in the CrowdStrike presentation deck, but I think CrowdStrike international sales is 32%, and it's basically stagnating. So it's not growing, not getting lower actually, but SentinelOne is working on an international revenue base of 37%, and it's actually growing. Yeah, they hire a lot of people in India, for instance, and that is nice to see that they are a little bit more diversified. That is what I like to see for sure. Yes. And they are way more diversified in terms of their solutions. Yeah, I think what I've checked here, I think SentinelOne is doing 50% on other business, or achieving 50% revenue other than endpoint protection. Yeah, so the legacy business of CrowdStrike and SentinelOne. And SentinelOne, only 30% of their revenue is something else than endpoint protection revenue. 50% by SentinelOne and growing, and CrowdStrike only 30%. So it might be the case that the solutions they're currently rolling out, I'm not sure why it's delaying, I'm not sure why revenue growth is not looking that attractive and this kind of stuff. I assume that yes, it can grow triple digit, this AI solutions, but or data or whatsoever. But again, if the base, the fundament is so small, 10, 20 million, 100% growth is not that much compared to on 800 million or whatsoever, 20% growth. Yeah. Simple mathematics, I would say. Yeah. Mathematics. Yeah. However, guys. However, let's go on. Let's go through the sheet. Gross margin covered already. Net income margin, non-GAAP. Yeah, non-GAAP. But GAAP again, not looking good. Yeah. However, revenue. Maybe there's kind of a, maybe in this net income, in the GAAP base, maybe there's some kind of one-time effect which took place, and next quarter it will look good again. Man, I already feel, even though the results are really not compelling, I already feel that I am interested in purchasing more shares. Really feel it already. Oh Lord, I get digging deeper into this rabbit hole of pain. However, let's go on. Guidance we covered as well. Again, wasn't adjusted. We have actually neutral operating margin on a non-GAAP base. Not sure if that's the first time, but at least it's neutral. And it might, or seems like in the future it will be more like 4% or more. So I can assume that next quarter it will be something like, let's say 3%, 4%, and then the next quarters they must be higher. They must be higher to cover this 3 to 4%. So that's great to see. And I think Tom Weingartner, the CEO, stated in the past earnings call, that free cash flow margin will be a bit higher than non-GAAP operating margin. So let's say 5 or 6%. That is nice to hear, at least on a full year base, positive free cash flow. So money what you can utilize basically for grant dividends, buying back shares, what they want to do now, or lowering in general the debt level. So yeah, that is nice. Free cash flow margin, I think it's a very relevant number for a lot of businesses, and SentinelOne is not an exception in this regard. But again, yes, full year revenue guidance not looking that great. I mean, okay, that's already it. Nothing too new, nothing too game changing in terms of earnings presentation. Let's check out what is going on with the aftermarket prices. If the number is up to date, and I assume it's up to date, so now it's even a bit higher, it's minus 12%. I will not do any after hour action for sure. Again, I will sleep on it, check tomorrow the numbers, check the transcript of the earnings call, and we'll see what I will do next actually. Yeah. Maybe I will even utilize this dip for selling or purchasing further shares. However, let's check out what is going on, if we have already first market reactions. Yes, and we have 4 of them. So first of all, we have the results itself. Is there anything new? Not really, not really, not really. Buyback, I think they're not mentioning anything about the buyback program, which is not that unrelevant for some of the investors, I think, not for me, but for some others. Okay, let's see what other reactions. So, Jäger8888 is mentioning another disappointing report. They should put themselves up for sale. And then the ROE Rocketeer I sold a while ago, so I have not been following it closely. What is disappointing here? Joff is writing, I agree, I was really hoping for more. It's a good product, but the business just can't find its footing. Yeah, and that is exactly what I can rely on. As I mentioned, it seems like the technology, the solution, the service, it is working well. But what really, and it's not the first time I'm experiencing this, and I made my learning with this, with a company like what is called Perion. Don't want to think about this anymore, but a lot of times I think as an investor you can make this experience. There might be some businesses which sound great, which might be equipped with a lot of potential, yeah, and the future rising star whatsoever, but it's not worth that much when you are invested in a company who's have this kind of upcoming stars. But on the other hand, the existing cash cows are not giving that much milk anymore as expected, and the drop of the existing large ones is way stronger basically than the small ones are rising. Yeah, I mean on the absolute scale. Yeah, so which means again, if you make $1 billion with your legacy big business, yeah, whatever it is, but it's getting lower by whatever 5%, it's basically 50 million. And if you have a rising star and and they're stating some triple-digit number, but it is, let's say 50 million, or let's say 20 million, yeah, 20 million, then 100% growth is another 20 million on top, and you basically can't balance out and compensate the 50 million which you lost with your legacy business. Yeah, you're still 30 million lower in revenue, and that is something which might be the case SentinelOne is getting challenged with as well. That yes, they have a lot of innovative solutions and this kind of stuff, but the USPs doesn't come through it. And still the legacy large companies, they are very aggressive. They have a lot of money to put it in sales and marketing and research development, being very aggressive. They protect their markets, and even difficult to compete with them for new projects, very likely, especially when we talk about the now large products like endpoint protection, like cloud protection, yeah, like identity protection. Data AI seems to work well, data at least, yeah, but the others, not sure about it. Okay, what else was stated here? If there's another compliment. This is a gift that keeps on giving from the short side. Nice example for those who think stock compensation isn't a real expense. Yeah, and I mean, again, I mean, you're talking about the stock compensation, and which is here on a level of 30%, and I mean, you can expect that if employees of a company getting shares as payment, yeah, shares of stock of SentinelOne, and after 1-2 years of holding them, they are allowed to sell it. I assume a lot of them will sell it because they just own it because they get it as the payment basically, and not everyone has the attitude to be an investor, and not everyone want to be invested in the same company they are working for. They want to be a little bit more secured, and therefore diversifying their risk and their money, their capital. And so yeah, of course when they sell these shares, they are owning, they're getting by SentinelOne itself, by their employer. Stock price drops as well, but again, I mean, that's not the major reason. The numbers are definitely not compelling. Yeah, that's the truth. And I mean, again, nothing new in terms of the verdict and the rating. And Gakpo, again, he asked, what do you think about next Q2? I will see, man. I will see. I can imagine that net income margin on the GAAP base is actually not that bad. There's some kind of one-off effect, which is hitting in here very strongly. And then at least really the profit side is not looking, the profit side in general doesn't look that bad. Not that bad. Yeah? But what really doesn't look nice is the revenue side. And clearly I'm invested again more for revenue growth, no doubt about it. And that is not the case at the moment. That's not the case. So, and profit, I'm not invested into a cybersecurity company to get now some dividends or whatsoever. Profit is not interesting for me. It's really revenue growth, getting market share. And look, I mean, with this deaccelerating revenue growth and ARR and big customers doesn't look as well that compelling. Yeah, okay, so nice to have so much solutions and more potential and total addressable market is left. And profit side is getting better as well. But again, I want to see the growing revenue stronger than the competitors. And not sure, I need to check out what is the growth of CrowdStrike, for instance. But I assume it will be more or less on the same level of something like 20%. And that's not crazy. And that therefore it's quite reasonable, I think, that SentinelOne is not priced that high, especially when you think about that they are a small company and should actually grow quicker at this stage of their size. Yeah, like what is it? How many billions we have here as enterprise value? It is 6 billion. Now only 5.5 after the drop, or even a little bit less, but yeah, 6 billion, let's say like this right now. In this size you want to see that they're accelerating quicker. I need to think about this. It is how it is. Guys, I hope you enjoyed the stream. Soon I will give you a new update about my portfolio. As you can see here, always sharing this at the community section of my YouTube channel, but as well on Instagram. I keep you updated, and let's see how the rating of the different companies will develop. Guys, I hope, I mean, it was the last stream for this earnings season. I hope it was acceptable for you. I'm sure nobody of you covering and following me through all the earnings streams, but hopefully the ones you are experiencing together with me are okay for you and it's adding some value to you or entertaining you a bit. So thank you very much for joining, and thank you very much as well for joining today. If you like what you have seen, feel free to subscribe to my YouTube channel and like, of course, the stream. Feel free to follow me on Instagram, same name like here, A Sense of Capital. And yeah, guys, that's it for today. Would love to have a better end of the earnings season, but it is how it is sometimes. Could be worse, and let's see how I will behave in terms of SentinelOne. I'm a bit happy that the earnings season is over. I like to experience it, but it was a little bit too busy in the past weeks, especially with my regular professional life. So happy to recharge my batteries and focus a bit on other things, even though it was not blocking all my time actually, the earnings streams, but yeah, it takes time. So even more, it would be great if you can leave a like if you like this video, would be amazing. And guys, as always, I mean, it was no financial advice, no consultation, and there was no guarantee for correctness of the provided data. So make sure you do your own research and you check the numbers, you make your own decision of investing. And more important than investing is life. So take care of yourself, take care of your beloved ones. And guys, that's it for today. Thank you very much for joining. See you next time in roughly 2.5 months, I think, 2.5 months. Cheers. Bye-bye. A sense of capital.